John Lee. He's a respected voice in the precious metals community, and he's the CEO of a silver mining company, Silver Elephant Mining. John, welcome to Ron's Basement.
Great to be back at your show, Ron. I think this is our third acquaintance.
What's the latest news at Silver Elephant? What are you most excited about? I know you're actually producing silver at this point, and there's some big news regarding the sulfide deposit. Let us give our viewer kind of a nutshell of what's going on right now.
We are. I think first of all, if you look at the number of ounces of silver in the ground versus the valuation, Silver Elephant is bar none the best value silver junior silver mining companies by a long stretch. So at around currently $30 million market cap valuation with no debt and about 100 million ounces in the ground, we're selling for at 30 cents an ounce of silver in the ground. And people, the naysayers or those who has bought in the top 3 years ago and subsequently had to sold at a loss, everything's about the timing. So there are different reasons to say, well, there are ounces in the ground, but there's no feasibility study, there's no reserves, so you're not sure how much ounces you can extract out of the ground. It's okay. And then the silver price, and then as we started production, then they're saying, okay, this is a one-time deal where your partner is digging all the oxide out of the ground and writing a check for $7 million over 3 years, and there's no upside to that. I was like, well, wait a second, right? How many mining companies actually generating cash flow? We already got 2 million. We're getting another 2 million in 60 days. And all of our operating costs has been taken care of. So what's the beef with that? So we said, okay. And now we're taking this feedback, however, in strides, just like Jeff Bezos said, whenever there's criticism, you look yourself in the mirror and say, is it true or not? If it's true, then let's do something about it. So, okay, fine. So we model our project and looking at our crown jewel, which is a sulfide resource that's more than 90% of our total global resource. Oxides only account for 10%. And that is that's an awesome cash. Somebody is paying us money to take that out of our overburden. Great to do that. And we're making a bit of a noise since August, and we've been remodeling and we'll be selectively mining and commissioning our sulfide phase 1 operation by the end of the year. So it is not a major open pit operation, but we're going to dig a tunnel into the hill on a flat, and then we're going to be digging the best of all Paca sulfide at about 400 grams per ton out of the tunnel and then truck it into a local processing facility. And so that will be additional, not revenue, but pretty confident it will be a not insignificant monthly cash flow to our bottom line. So, all in all, we've diluted, we issued the least dilution, and we have the most ounces in the ground per valuation. And now not only do we are in production for the oxide portion of which we're getting 7 million over 3 years, but we're actually commissioning a sulfide portion of which we believe at a $30 silver it's actually be profitable because our grades are so high.
Yep. So I want to be clear, and please correct me if I'm wrong on this. You have over 100 million ounces of silver. It's kind of segregated in two levels. The upper level, which is up to the surface, is the oxide level. And that requires a special type of processing plant. And you have a partner, Andean, I believe it's called, that you're basically scraping that upper level off, and they're taking that to their specialized equipment and processing that, and they're paying you a certain amount per ton for that. The crown jewel of the company is the sulfide level, which is the deeper level of silver, and that's where the 90% of your silver deposit is. And currently, or soon, you'll be digging a tunnel down into that to kind of prove out that silver is there, and start to process some of that, which will, I think, prove to the market that, hey, it's here. We can have it processed. And how many ounces roughly are in that sulfide level, the deeper level that you'll soon be accessing?
Right, Ron. The sulfide it's deeper, but it's about 20 meters from surface. So it's
Okay.
not, it's sounding like we are, digging like near the earth mantis.
Yeah. Okay.
No, it's 20 meters from surface, and what we're digging we're not actually digging down into the ground per se. What happened
You're
is
going straight into
there's
the hill.
like a dome.
Ah.
So the resource is permeated at the dome, and then as you go from
Gotcha.
the flat, then it's go underneath the surface. So some of that resource is bleached out, washed out, but the dome has quite a bit of that resource. So we're going directly into the dome. So we're not digging down; we're digging just directly into the
horizontal
dome, and then we'll be extracting that resource. Our preliminary assessment is not a feasibility study level. We'll be extracting 100 tons per day over a 3 months period, starting at around November to next February, with the total ounce extraction about 100,000 ounces of silver. So if you look at 100,000 ounces of silver, that's about $3 million in revenue. But because it's a quite a simple exercise, and the grades are so high, nobody's digging 350 grand silver. If you even look at the First Majestic Fortuna, they're mining average underground with extensive infrastructure at about 200 grams. So we believe our margin is quite high, approaching 50%. So if you look at a margin of 50% minus taxes, we should be netting, starting a $3 million revenue mark, right? So I would say, given a company's burn rate, which is not that high, at about $300,000-$400,000 a month, that would be enough to pay our monthly expenses. And we got about a $2.5 million US dollars of payment from NDM Precious Metals in January. And by the way, they're not paying us by the ounce. They're reimbursing all operating expenses from royalties, government taxes, community relations payments, social programs, and infrastructure improvements, equipment, everything. We're netting millions of dollars, up to $7 million in the next 3 years. So, the way I look at it is, you see some companies really being unfortunate to take on a typical project financing of debt streaming and whatnot, and you have a hiccup, and then all of a sudden, you're gone. Ascot is a good example. Derek White, who I met, is a good acquaintance, and their stock is down 70% because their underground development had caught up to their processing capacity, and they're down. And then earlier, there's a number of other examples. So I think what's important, Ron, going back to what we talked about, is we're like Elon Musk's boring company. We don't advertise too much. We don't promote too much. We're not punting out feast in projecting to the moon of millions of ounces production. But what we're doing is minimizing our dilution so that every single additional investors and buying power that we're brought on board will translate to higher prices, because we're watching our dilution very, very carefully. And these numbers, and what I'm saying is, these are backed up by our action. Like we issued the least dilution, and in turn, in the last 12 months, we're one of the best performing stock in the silver junior space.
Yes. And you are, hold on, I want to show you one thing real quickly here. I'm going to go full screen. You are promoting, because I don't know if you can see that, but I have the Silver Elephant there, and there's the stock symbol SILEF being held by the Silver Elephant here in the basement.
You see that, but okay.
yeah. Well, he's in the background there. I'll show him again here before we wrap up. But if you have time, John, I guess 3 questions or 3 things I want to reiterate to our audience. First, at current market valuation, in today's October 1st, first day of the fourth quarter, it's unbelievable that the company is valued at 30 cents per ounce of silver in the ground. And I'm just I'm not a financial planner. I'm not giving financial advice, but I'm a person who loves silver and loves physical silver. But I think if I'm not going to hold it in my hand, the next best thing is to know that I own stock in a company that holds a ton of silver in the ground. And if I can get it at the equivalent price of 30 cents per ounce, like you explained to everyone, there's a lot that goes into getting that out of the ground. But just the idea that you can buy high grade silver in the ground still for 30 cents an ounce, I think is a very attractive
Silly.
proposition.
Yes. You got 3 questions. What are the other 2?
The other 2 is with the sulfide layer that you're now digging the horizontal tunnel to get to. From a long-term perspective, would that because that is 90% of the company's deposit, is the plan to mine that on like an open pit type basis, or would it be tunneling? How any ideas of what you're looking at there?
Right. So let me answer those 2 questions first.
Okay.
Some of our naysayers, people, we got a lot of questions asked. So what is the catch? What is the catch? And you got some angry shareholders say, I don't understand it, but naysayers that you're giving the farm away, giving Ox 10% of our resource for next to a song, you got no upside, it's capped. To my answer is, let's really look at this factually and use a bit of a deductive reasoning and critical thinking. The oxide deal is about 8 million ounces, a maximum of 8 million ounces, not more than that, oxide. And they're paying us $7 million US dollars for that. That's 10 million Canadian. And they're giving us they're footing and reimbursing all operating expenses. So that's 7 million guaranteed. Now, so on a silver per ounce basis, they're paying us $1 an ounce of silver, right? For silver to be dug out. And the deal was done a year ago when silver is $21. So if the same deal were to be done today, they would have paid us probably $15 million, but we don't have that in hindsight. Right. So there is a historical precedence. It's not a precedence. It's a fact that our silver is being valued at $1 an ounce. And so I mean, that's straightforward. Right now we're trading at 30 cents an ounce. And now you're talking about the horizontal tunnel into silver. There's a couple of fold. This is not just a pedantic exercise, because at a $3 million cash flow, 100,000 ounces of silver production revenue, we will be demonstrating solid cash flow. We will not be digging unless we believe that there's cash flow, but the judge is still out. And we'll find out very soon when I come back to your program 4 months, 5 months from now. Yeah. But it is an important exercise because it will show that this sulfide is amenable for conventional industrial recovery, metallurgical recovery and processing, and there is bona fide off-takers. So that is the purpose of the exercise. Is number one, to generate cash flow. Otherwise, I'm not into that. To add a shareholder's expense and working all that, sweating, and then digging something at a loss. Why would I want to do that? But it's actually to generate cash flow and then also to demonstrate that the sulfide resources can be developed and can be processed into a marketable product. So that we're to do that. And then from there, there's always a bit of unknown when you're not doing open, but the risk level is a little higher. So we're going to go in there. I think our first target, the goal is to extract 100,000 ounces in 3 months. But my experiences in underground development, especially given the project is quite well drilled, is it's a bit of like treasure trove, right? You literally go in there, you look around, and you maybe find some more, maybe you find something less. And so we're not saying that we'll continue after 3 months, really depending on a lot of different factors in the ground conditions in the different ways and over silver prices and our ability to have reasonable cost control. And because we're directly exposed, we're putting the expenses, we're also getting the revenue. So depending on all of that towards early next year, then we're going to sit down and say, how is this working out? And then we'll be looking around. I mean, if we can find additional resources, because remember, tunnel is one-dimensional, it's one way. So we're going to have to be a little careful in expanding our operation underground. But if all goes well, I don't see a reason we'll stop right there. But if anything is really, just before I go to the last question, is really continue to enhance and raise our profile and part of and that we're now on the radar of a number of major mining producers in the billions of market capitalization range, because Ron, like you said, they don't want to take that risk of something that's not going to produce cash in the short horizon. Right. They're not going to take something risk of digging ounces that are not making money because they're losing money right now. So what they're looking for is something quite reasonable valued that's imminently producing or already producing. And also, most importantly, is has got a big resource in the ground of which they can get to their reserve resources table. So there are a number of interests from Canada and from Latin America and also from Asia that are just in the last 60 days taking a second look at Bolivia because Mexico is somewhat blowing up,
right?
And then looking at us as an emerging producer with a well-endowed resource.
Is there excess capacity in the area, excess milling capacity for the sulfide material? Obviously, you're at the octa, but is there also excess capacity? Are you confident within the area for sulfide?
Yes.
If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
We have identified several plants, half a dozen plants that are very happy to take with capacity to take on our toll milling for our resource, and because we're very, very high grade. And secondly, Bolivia, despite a lack of foreign investment up till about 3-4 years ago, it is the sixth largest silver producer in the world. Bolivia produced more silver than Argentina at around 40 million ounces. So all the major off-takers, Trafigura, Glencore, Louis Dreyfus, Blue Quest, Penfold, and just about anybody are very active in the region. And Bolivia is one of the very few places where you can get a really very high grade concentrate, of which they will go to Europe. Most of that go to Korea, Japan, and go to China. So toll milling and getting a very, very competitive rates for toll milling and concentrate sales is not a problem.
Okay. And you my last question was about Bolivia, and I think most people incorrectly don't realize what a good mining jurisdiction Bolivia actually is. But I want to circle back one more. I promise you've given me so much time, and I appreciate this. But one more quick question: when we compare the sulfide material to the oxide material, is it worth comparing the two in terms of grade? Is the sulfide material going to be higher grade? Is that what you're anticipating, or how do they compare to one another?
Right. So let's talk about grades. I mean, in our website, we're very transparent. The 100 million ounces, actually it's 120, but 120 measure indicating inferred, but indicated is about 100 million ounces. That is envisioning a giant open pit at 10,000 tons per day of $1 billion investment, grading at around 70 grams per ton, which is no different from some of our peers at Abra Plata and then Aftermath Silver, boasting a big triple million resource, right, to promote. So if you're to increase the cutoff grades, there is I would say about 40 million ounces of oxide and sulfide silver that's grading at over 200 grams of silver per ton. So that is that resource that we are marketing ourselves, and that is the resource that the major producers and our internal team is looking at exploring and producing at a $30 silver. Of course, at a $50 or $80 silver, the configuration will be very different. But at the current silver price, we think that there is a very good chance that these 30 million ounce plus silver could be extracted for economic benefits. I mean, the Indian precious metal already demonstrated that. And the company Silver Elephant will surely also for the oxide, and Silver Elephant will also surely demonstrate that for the sulfide as well by the end of the year.
For the sulfide. I promise, John, one final question. With the sulfide material you talked about, I believe it was toll mill like mining. It's going to be a different arrangement where you'll, correct me if I'm wrong, where you'll take that material to the mill and maybe pay them a certain amount per ton for them to process it. But if you hit the mother lode of silver, or you're going to be exposed to how much actual silver comes out of that ore. Is that accurate?
Right. So on the sulfide portion, Elephant is riding the upside and eating the downside as well.
Right.
And in terms of processing costs, we're very clear. We know what we're doing. So as we were discussing and as we were discussing and talking to NDM Precious Metals last year to try to strike a deal. We actually compared we had discussed the route of, doing toll processing, right? So if NDM were to charge us for processing, and then how would that scenario work out?
Right.
But we chose not to do that because we have very little bandwidth. Like we have 5 people in our Bolivia office. We just don't have that capacity to do reconciliation and accounting and costing and management on a monthly basis. So we chose the other route, which worked out well for NDM. But I think it's still worked out well for us because we minimized our dilution. But the processing costs for oxide and sulfide, despite their different processing methods, are on par, pretty much the same. Because in the end, it's about getting the material to their plant, and you either burn it or you chemical or you do some sort of processing to it. The reagenting cost is nominal. And it's all about your silver going in, what the kind of grades going in. So I would say the per unit processing cost is quite similar, and that there are literally dozens of these sulfide processing facilities nearby where NDM mining is, in a place called Potosi. That's where probably arguably the largest silver mine in the world situates. So we don't really envision a lot of issue with the sulfide operation, and very soon we're very, very confident we're going to be making some money off that. And looking at the mining cost, which is minimal, and then because we're not digging vertically into the ground, and the operating risk is minimal, cost is reasonable, and our grades are 50% higher than our comparable peers that are mining underground in treacherous conditions. So we feel pretty confident that we'll be able to demonstrate again that the sulfide operation is not only profitable, but that the end product is marketable, and that looking to expand that sulfide operation. You talked about sulfide open pit. That is something obviously will be our end goal, because that's something a lot more scalable, sizable, lower cost, higher production. So that is something we need to work very closely with NDM mining, because majority of that silver is under that oxide cap. So depending on their mine plan, we have to amalgamate and work in harmony with their plan. And majority, about 40-50% of the overburden above that sulfide is oxide, of which they are supposed to be paying to take that out of the way. So if we want to accelerate our sulfide development, maybe with the help of a major company that we're talking to, then I think the price and the timing is ripe to really do some big numbers. Paca, not like 1,000 tons per day. And by the way, 1,000 tons per day is probably more than 4 out of 5 junior companies you're looking at. And I want to sort of back up for a bit. What we have accomplished cannot be underemphasized or cannot be understated. And the reason I say that is, from the day we signed the deal in September, within a month, we're in production. And we have been in production month in and month out without interruption, without incidents of safety, 100% adhering to environmental. We got inspectors coming in from government, federal. We got more than our share of naysayers, okay? So they're out there, they're peeling the onions, they're digging under the cover. We have really demonstrated we're approaching our 1-year anniversary. And for end of August, when we announced our monthly quarterly production, based on the revenue, royalty payment made to the government, the end of August, which is 30 days prior to today, the end of August, we're at 954,000 silver ounce production based on the royalty that we pay to the government. So it's reasonable to say that by today, we are preparing a 1 million ounce 1-year anniversary. And that will, I think, be a fairly big event, because not many silver mining company can really boast that number. People are going to say, well, 1 million ounce, you're not getting the upside. All the upside is given to NDM mining. Wait a second, right? We are getting last year 2 million, getting another 2.5 million. We are one of the very few companies actually generating cash. And the proof in the pudding is not in our financial statement. It's looking at how much minimal dilution will have occurred in the market. So take it in strides. We're going to, and that's okay. We're going to continue to climb that are worried. We're not going to putting us spectacular drill programs. Like we're going to be the boring. And by the way, we're not short of the good drill results, because Indian mining, they had some reservations about the confidence level and our resource, and because some of the drill holes were drilled about a decade ago, so they drilled about 28 holes, and half of them were outside of the resource boundaries and envelope. And guess what? Every single hole hit silver, as far as 250 meters away. So
Wow.
if we're delineate from 250, the entire Paca resource is about 500 meters by 500 meters. So if we're able to delineate that 250 meters back towards the resource boundary, there's a lot of, and one other thing I want to share with you, that's what we're talking about more, is I had a little bit of a sleep, is people say, well, you're giving the farm away, right? The oxide's gone. Well, first of all, it's 8% not resource. And then secondly, as we're doing reconciliation with our auditor on whether we have to redo our technical report to bring it to current.
Mm-hmm.
As of today, we can confirm not a single ounce of oxide resource in our 4311 resource has been depleted. What they're doing is they're literally just scraping off the surface, and it's what they call the colluvial materials. Unfortunately, colluvial materials, technically and also just historically, is notoriously difficult to be included in the technical report, because they are very erratic. It's kind of like a placer. It's all of a sudden you have a pocket here, you have a pocket there, and there's inconsistency of the colluvial versus what's underneath the hard rock. So literally, they were literally just scraping the colluvials, and they were exceeded all of us with the wildest expectation. That already extracted 1 million ounce and 200,000 tons, and they're up to 800,000 tons and 8 million ounces. So we already fulfilled about a quarter of our contract.
Wow.
And yeah, we haven't touched our resource. And I think so far, I was just like, well, if any investors, shareholders, major mining companies were to looking at some of the major check boxes, community relation, does the project and the company have the green light from local, provincial, federal level to do activities? And does the local community support the project? Is there enough infrastructure to sustain the operation? Can the operation be carried out on a continued basis? And is there upside to continue and enhance and scale the operation? I think in the last 12 months, we've really done. I can't equivocally say or confidently say in the first 3 months, but we have been at it for a year already. And you can see hopefully from just sort of the level and data points we provided, which is a lot more than we did 4 months ago when I come on your show. I was a little bit more evasive because I wasn't quite sure where we really stand. I mean, with a lot of people and the neighbors, and obviously, I mean, there's not always 100% alignment between us and local community, but they've never stopped our project. And when we went out there, we shake hand, and it was 150 ton. It was 150 ton per day. It was 10 trucks a day. We're now around at 60 trucks a day. And yeah, we are still continuing to reconcile, talking, and maintaining a positive relationship with the local community. We're the largest employer of the Pulacayo community, and we're looking forward to continue our very constructive, beneficial, mutual relationship with the township and also with the government. And with India Mining, they already probably made out 50% of the 7 million they're scheduled to pay us. So it's really a win-win situation for all of us.
Yeah, it strikes me, kind of given where you were when you started that partnership, your strategy, and now that you're it worked. Yeah. In that now you're shifting to the second phase to go into the sulfide, but it was from a risk management perspective, right? Like
it was executed flawlessly.
Yeah. There was it eliminated any material risk to the company. It was really only upside potential. But now that you're, for lack of I can't think of a good way to say this, but now that you're making that money, or you're playing with house money, however you want to say it, you can move into the sulfide material and take on a little bit more risk, without putting the company at risk, or putting the company.
Exactly.
Yeah.
Exactly. The growing pain is the most difficult and most dangerous and most precarious phase of a mining company. And that's why a lot of them go under, especially the ones that carry debt. They breach the covenant. Their mothership is kissed goodbye. So we managed to transition through that very, very difficult phase. And now we're in Bonify. We're 1,000 tons per day, 60 trucks that are moving. And,
the community's happy. And I'm sorry I interrupted you, but the community's happy. And on top of that, this agreement is actually, to a certain degree, unless I'm wrong, kind of helping to remove some of the overburden that would have been a big additional expense for the company or for any other suitor that you may have in the future to get to the sulfide material.
And if the suitor come in and say, you know what, we want to accelerate this, I want to do 5,000 tons per day, I want to do 3 million, 4 million ounces a year, which Paca is more than capable of doing so, guess what? We will be charging Indian precious metals, right, for digging the sulfide for them, and we're just going to stockpile on the other side, and they take their trust and come and get it, right?
Oh, yeah. Oh, boy. What's the catch, John?
There's no catch. You know what? I think the catch is we didn't have a lot of institution coverage.
Yeah.
Part of the reason was we didn't dilute ourselves to a Bolivian.
Yeah.
So our volume is just not as high as our peers.
Mm-hmm.
And our market cap is not as high as our peers. It's not because we're making less progress or our project is less stellar. It's because we didn't issue as many shares.
Right.
I mean, for example, on a Friday, we traded 1.3 million shares, which doesn't seem a lot by comparison to our peers, but we only have 34 million shares outstanding. So in a single day, we traded 4 million shares of our float. And that's the third highest trading volume in the company history. And the highest trading volume was only 2 months ago when the company traded 1.7 million shares. So think about it, in 2 trading days, we've traded 10% of our share flow. So I was just saying that, we're trading less volume than our peers is because we have 1/3 as many shares outstanding. But if you look at our chart over a 10-year window, our monthly volume is increasing, especially looking at the turnover relative to our shares outstanding. And we continue to be our boring company. We're not going to have a news release of an accident that our operation is stopped. We're working very closely with our partners. And we're not going to have a surprise quarter. All of a sudden, we'll have a cost overrun because Indian mining is taking care of our downside. Right. And then, so we're just very cautiously managing our sulfide phase 1, digging that tunnel. And if you were to go on our website or our social media, you can see the tunnel. We blasted. You can see the tunnel already. So we are on schedule. We said we're going to blast in September. We did, and then we're advancing a 340-meter tunnel into the mineralized areas, and we're going to do that, and we're going to generate our sulfide cash flow. Ron, there is so much to talk about because
I know
I want to share a bit of insight with you. When I was in China for 10 days, I mean, Paca is interesting, but they're always interesting in Pulacayo because that's where the major project is. We did some geophysical surveys back in 2021, and we recently just paid the survey people off with the Andean revenue, and we generated a number of very, very prospective targets. So the exploration potential is tremendous. However, we're gonna hold that as a secondary priority because it costs money. It doesn't generate revenue. But if the market want to play the game of drill bits, right, wildcats and shooting for the moon, we are just as capable of doing that. But we just choose not to do that right now. And it is really a multidimensional company that are extremely undervalued as if we were a company that just made a small discovery or a brownfield exploration company that has also ran. I mean, neither of these scenarios are furthest from the truth.
Yeah. It's almost like you have a layer of cash flow going on right now. Below that, you have this massive sulfide deposit that you're going to, be accessing and potentially creating some cash flow from. And then on top of that, but wait, there's more, because sounds like there is potential for a resource to expand at some point as well. And
It's big enough to add to a bottom line of every major mining companies.
yeah,
We're talking $5 billion plus. How do we know that, Ron? Because they're talking to us. That's how we know.
right.
And then I want to also briefly spend a couple of minutes talk about Bolivia. You asked
Yep.
about it,
Mhm.
and we didn't touch upon on that.
Yep.
It is not the best jurisdiction. I mean, it's very slow moving. It does have that rhetorics from the government, and it also has a relatively high tax rates of 40% with the very very conservative write-offs. So I mean, in many aspects of it, it's not the best of all jurisdictions. However, if you look at the bottom line, I mean, you have companies like Coeur d'Alene and the Sumitomo that are operating some of the largest silver mines in the world. Even as today, they've been operating uninterrupted for more than 20 years. And
Wow.
even when there are labor disputes, the government actually sided with the mining companies because the 4 or 5 major mining companies that are 20% of these mining companies are producing 80% of the revenue and royalty to the government, because the local cooperatives, they don't pay royalties and taxes. They're exempt. So they know by now they're very stable. Bolivia is one of the most stable countries in South America. Their currency being pegged to the dollar in the last 15 years. I've watched Bolivia since 2005. When I was the investor of the project Pulacayo, I see the infrastructure development in power, in water, in railroad, and in cable cars, and just the general standards of living increasing every year. And in fact, I would say Bolivia infrastructure is better developed than Peru, and it's safer than Colombia with a lot of drug cartels and paramilitaries. And the foreign investment in Bolivia has increased significantly. Close to $1 billion being invested in the country in the last 6 years. And the foreign investment, which was negative for the better part of first 2 decades of this since 2000, has turned positive recently. So the pendulum has really swung from anti-investment rhetorics to welcoming foreign investment. And this is politics. This is no different. You know, every 8 years or 10 years, U.S. and Canada and Mexico. Okay, the other thing I'll just conclude. There's a major strategic mining company, I cannot name it under NDA, is they have a presence in Bolivia. When I acquired Pulacayo in 2015, I knock on the door. I say, hey, God, I was just calling Da Vinci because my bottle of Italian wine is Da Vinci. I would say, hey, Da Vinci, you know, you're interested in this Pulacayo project. It's great. It's very similar to the project to your mine you're working on. And then Da Vinci said, "Well, John, I'm not so hot and heavy about Bolivia. It's a bit of red tape, very slow moving, and the tax is a little high. I'm not making a whole lot of money on the 2015 when silver is $16 an ounce. And if you want to buy my project, like, it's available." Okay, I said, "Well, I'll try to sell, but you're asking me to buy yours." Okay, let's keep in touch. And then fast forward to just less than a month ago, I got a call from Da Vinci. Then you say, "Hey, how are you doing? Like, how are you doing? Congratulations, right? I monitor your project, great progress. I like Paca. It's low risk. It's open pitable. I see that been mining for 12 months, and I see your production is 1,000 tons per day, and that is not like a mom and pop scale anymore. And now they're visiting and looking at our data room. So, and I said, Da Vinci, what made you change your mind? Because Bolivia has been a status quo. Nothing has changed in 15 years, except the silver price has gone up. And they said Mexico is a technical retreat on Mexico. Mexico has a lot of the problems Aboriginal, federal, anti-mining stance, drug cartels, gangsters, and now they're banning open pit mining. And it's whatever you have it, you name it, it's there. And all of a sudden, the table is turned 180. And Bolivia is becoming very interesting destinations for investment.
Yeah, and I think another factor that plays in to what you're saying is that Mexico is also the world's biggest producer of silver. So if there's, and there are, right, I agree with you 100%. Every time you turn around, you hear something negative or challenging for mining companies to be facing in Mexico. So you have all this silver mining presence in Mexico, that could be looking for a new home, kind of like a funnel, right? Like there's a lot of activity there and has been over the last decades that suddenly is facing challenges and is going to be looking outside of Mexico, which could play favorably for a number of companies like
And
yours.
not only that, Mexico has been a favorite destination since the boom started in year 2000.
Yeah.
It's been 24 years. And
Right.
Ron, an average silver mine, open pit, probably mostly gone, even underground, is about 8 to 12 years.
Yeah.
And
Yeah.
anything that's easy cherry picking, already being picked and cherried and time and over and over and over and time again, given it was probably the number one destination. Like every junior company, mining company has probably got a Mexican project somewhere in the stable, right? So
Yeah, yeah.
I'm saying it's not as cherry easy picking as it was 5, 10,
Yeah.
15, 20 years ago. And then how do I know that? Again, like every time there's a Mexican mining project that comes to my table, it's being shopped over time and again.
Yeah.
All the easiest picking already being done already. And Mexican has reached that richest valuation that can be commanded in North American equity market. Anything remotely of merit that's controlled by a Mexican local owners could be easily flipped, right, for 5, 10, 15, 20, 30, 40 million dollars. Anything that's any remotely of merit already being shopped around, already got to somebody, and then probably already latent with royalties and stream that's already having the project completely, what I call defaced, because it isn't what it is. It's already being sliced and diced so many ways. That's just not even worth looking at anything from Mexico right now.
Yeah. Yeah. Well, John, thank you. On behalf of myself, I'm a shareholder, our viewer. You have shared a great amount of insight into the silver market, the mining sector, and obviously in particular, what I think is a super exciting prospect at Silver Elephant. I will put links to all the company's socials, contact information, website in the description of the video. Is there anything I forgot to ask you, or any parting words you want to?
Yeah, I mean, Ron, our stock is up 50% on Friday. There's not any particular development outside of what we've been talking about. You know, the thesis of a boring company and this investment case still stands. And we recently got a number of inquiries, more than a dozen inquiries over the weekend. And by the way, I read all the emails I got to info@silverelef.com, or you can get directly to me at jlee@silverelef.com. They're like, what is the catch? And I explained to you, there's no catch, just because we rolled all the way down from 2021, and then we issued some dividend shares of vanadium and nickel, and that's why stock went probably down heavier than others, because it had a spin out event. And also there was some insider selling I talked to you about, because I had to watch over my babies with Sophia's Choice. We sold the nickel project for $8 million. So the other remaining spin-offs are no longer be required to be taken care of by me. So I'm turning into a buyer of the company. Is that, Ron, first of all, the company is always available to answer any questions you have by email or on the phone. So okay, schedule a call with me. Doesn't matter how big or how small your shareholdings are, and I really mean it. And then secondly is that you got a few people that were either disgruntled employees, or guys that have sold shares and then still holding that grudge. And some people, or one or two, that has multiple handles across multiple chat boards. And so I want to share with you that 90% of the inquiries that we received are thank you emails. People are there inquisitive, that are curious, that are doing the homework, asking the right questions, such as yourself. You know, what is it like in Bolivia? What is the relationship with the locals? How are you looking at visioning, expanding your production? What is the downside for your company? And you know, what is the recovery like? And you know, what is your exit strategy? And what is your experience working in Bolivia? What is your experience working in the junior market overall? What is your background? What do you know? What is the risks involved? They come away, they're all shareholders. We're getting about 10, 15 emails a week. They're all positive. Maybe one or two that are not sure. So the what you see or what you read publicly is not a representation of what is happening. I think another analogy would be if you were to look at, say, Google review of a restaurant, right? Like usually you read all the bad comments because the good people, funny enough, I will tell you this. For restaurants, sometimes, or especially in hotels, I don't want to write a good review because I want to keep it to myself. I like if I got more people going to buy my stock, like I'm shooting myself in the foot. So I recommend you approach the company directly and not just reading of somebody because their opinions are free and it's free for a reason. And also the ability to reach the chief of commander in chief also speaks volumes on how a company takes care of its shareholders. I mean, I've been in the investment business for mining for 20 years. I mean, there are companies that would not, like, I will ask, like, I would just call, I would say, schedule a call with me for the CEO. I never get to hear back ever. And you know, every company's handling is different. And I would just come and reach to us. We're here for the long run. I've been here for 20 years. We're not going anywhere. We're not here to kind of like a China shop where you go to the night market, you haggle, and then you transact, you disappear, right? I don't remember you from yesterday. No, it's not like that. And I'll just say you gotta read free posts from different choppers with a grain of salt, and we know as a fact that there are one or two corporates out there that are disguising up with multiple handles and with just access to grind, and we have no issue with that. And I want to conclude. I just recently read this book, which is fascinating. One of the best books I've read in my 50 years existing on Earth is Conversation with God. And it's a book about the purpose of life. And not being in the mining for 25 years, I say, you know, what's the next step for John Lee? And we're here to experience different things. So what's wonderful about this world is you have the identical set of circumstance for everybody. And yet everybody do and experience this set of facts and circumstances and events differently. So I would just say it's all you're choosing as to the path you want to take and the experience you want to come out of for yourself. And I would just say you don't want to take somebody else's word for it, especially for something negative. That you really want to go out and experience for yourself, because that's what the life is all about. Eventually, it's not just the angle of making the money, but the journey to get there.
And look at some of the big tech stocks after the tech bubble burst. Companies like Amazon, you know, their stock went down 80-90% and then we know what it did from there. Apple Computer went through the same thing. So I think I agree with what you say. And sometimes, the negative people seem more motivated, especially in the junior mining sector. It's not just Silver Elephant. I can give you a list of companies where I'll read comments, people saying, "They, boy, these people."
Has its own story, right? Has its own storytelling. Yes.
Yeah. It's all old. And I will say this to our viewer. In terms of your commitment to your shareholders, you agreed to get on this call with me, and I believe that you're in Mongolia, and it's probably after midnight for you right now.
Yes.
And a couple times as you were talking, and I thought, boy, he is passionate about this company, and it's almost past midnight. So we're going to let you get to bed, John, but say thank you. Thank you.
My wife wonders why, because it's coming up to our 15th anniversary, and she's wondering what we're getting out of this whole endeavor. Because I made more money in 5 years from the .com industry and the first 10 years of a mining investor than I ever have, which I am negative. I mean, I'm in the water for running Silver Elephant. But you know what? In the end, I was in the .com industry too. You talk about Amazon, which I can identify because I got out of the .com industry in 2000 when .com was at burst. I said, well, if I had stayed if I would have stayed in the Silicon Valley, what would that life have been? I never given a thought about it, because in the end, like I said, if I would have been in the .com industry, I would have been holed up right in this cocoon of techs and accountants in Silicon Valley. Whereas if now I branch out to the mining industry, I've traveled 35 countries. I've met a lot of different people. I've touched different facets of local community, government officials, shareholders, regulators, you name it, right? These experiences I've never had. I never would have had if I'd have lived that life. So, in the end, you kick the bucket. The house you own, or even the museum you're named for your donation after a couple hundred years, who gives a crap about it? So it's all about your perspective. I mean, it's going back. I would just say the way I see Elephant, as well as our sister company, Fly Nickel, which has a Vanadium project, is this silver mining company called in Arizona. I think it's called Arizona Star. Is that the company eventually got bought out by 32 South, which is an Australian company for $4 billion, run by Richard Work. Is that I just want to make sure that we really watch our dilution, so that and then we preserve our share count. so that we're able to generate cash flow, minimize our expenses, so that all of our shareholders will benefit from that bang of the buck, right? That their purchase in the market will make a difference in the share price going forward. And we just have to be going steady and step by step execute our strategy, starting with the oxide, getting the sulfide operation, maybe getting a partner to build a plant sometime towards late 2025, so that we repatriate, we sort of we provide answers to the local community to continue our investment at the property, and then eventually deliver either cash flow or a buyout sometime in the next couple of years. And then once we have the money and better discretionary capital, then we're going to drill on some of these incredibly exciting drill targets, of which we spend few $100,000 in geophysics to identify. So I like I said, we have all the different ingredients in the making to make a very, very exciting story. There are still some shareholders that are sort of holding grudges, but I'm sure, especially now the stock has broken out of the 50-cent resistance level, which is now a very, very strong support level. The next level is 75 cents, and it's going to be $1.25, and then hopefully it's going to go back to $2.50 of one is illustrious glory past in 2021, not so long ago.
Right. To the moon and beyond, right? I mean, really, you never know where these things can go. Thank you, John. Again, thank you on behalf of myself and our viewer. And I'm going to look forward to catching up with you again in a few months to hear about this progress. And I hope you have a great rest of your day.
Thank you, Rob. Thank you for your time.